A lot of the bid in the US dollar seems to be correlating with flight to safety, as the yen and Swiss franc have also absorbed some of this flow, albeit reluctantly, in recent days. We saw something of a rare sight as the US desk returned to fuller form on Tuesday, with the stock market showing a tinge of sensitivity to gravitational forces. But there didn't seem to be anything new going on that would have justified the pullback in stocks, at least as far as downside risks were concerned. It's possible investors were worried about the Fed feeling even more comfortable raising rates looking out after today's impressive US ISM manufacturing number that was nearly 4 points above consensus estimates. This came in contrast to the below forecast UK construction PMI drag, which followed up Monday's UK manufacturing PMI disappointment. And yet somehow the pound was able to avoid trading as one of the weaker currencies on the day, perhaps after already underperforming on Monday. It's worth noting a lot of the dollar selling that we did see on Tuesday came ahead of the US Open, and with US desks just getting back into it, we wonder if they will go along for the ride or if they will look to take it the other way. The New Zealand dollar was the weakest currency amongst the more actively traded currencies on Tuesday, down just about 1%, while extending declines to a fresh 2.5-year low against the buck, trading at its lowest level since February of 2016. Another negative GDT auction result wasn't going to help an already beaten down Kiwi rate, with some cross-related Aussie Kiwi demand also factoring after the RBA was more upbeat than the market anticipated in its early Tuesday decision. Still, while this may have helped Aussie against its Kiwi cousin, it could not avoid another yearly low against the buck, dropping to its lowest level since May of 2016. Clearly, the risk-off flow did nothing to help the traditionally correlated commodity block currencies with risk. The Canadian dollar was also hit like the rest, with this one also stressed about a NAFTA deal and contending with a retreat in the price of oil into the close. Looking ahead, we get Aussie GDP, services PMIs out of the Eurozone and UK, Eurozone retail sales, US trade data, a Bank of Canada policy decision, and some Fed speak. That's all for now.